My name's Mike Sullivan. I'm a former IRS agent and teaching instructor. I worked at IRS over a decade. Welcome to my YouTube channel. They're short, they're sweet, they're to the point. I pull back the curtain of IRS so you can see really what's going on and things that you need to know. You're welcome to subscribe and ask me questions, and for those subscribers, I will answer any questions you have, especially if you have a pressing issue. So today I want to talk about if you owe IRS tax debt. If you owe IRS tax debt and you don't understand the IRS National Standards Program, you shouldn't be calling IRS. Flat and simple. A lot of people who call me are just do-it-yourselfers, and I understand that. You actually get few clients from YouTubers, but the ones that do usually are in more serious trouble. They just kind of scope you out to check to see if you're credible. So when you owe IRS tax debt, I just want you to understand that the IRS is going to take a financial statement, either a 433F or the revenue officer 433A. Generally, there's one of three ways IRS disposes of cases. They do so by either putting you into a currently non-collectible, which there's pros and cons. Your case gets shelved for a couple years, but penalties and interest accrue, kind of lets you get back on your feet. A payment agreement or an offer in compromise. So IRS has to have a common way to evaluate every single person who owes IRS tax debt. I believe right now the number is somewhere between 20 and 25 million people. They need a form. They need an IRS financial statement to go ahead and to make that determination. You should pull these forms up and be familiar. If your case is in the service center, it's a 1-800 number, you want to pull up the 433F. How does IRS, or how did I, when I was a revenue officer, decide how I was going to collect and proceed? I have to know what your assets are, your income is, and your expenses. And today, I just want to focus on the income and expenses. It's really important you understand this, because if you don't, you have no business calling IRS, or you're going to have a train wreck there. What the IRS does, it uses the Department of Labor statistics that are used in bankruptcy and trustee work. And IRS will fix you into a specific amount for food and clothing, for housing and utilities. That all depends where you live. For vehicle ownership cost and vehicle operating costs, or public transportation. That is, IRS will predetermine what they allow you. Your housing and utilities is done county by county. You can go to irs.gov and look at housing and utilities, and you can find that. IRS will allow your health insurance, your out-of-pocket care, court-ordered dependent care, and some life insurance, and your taxes, of course. Anything usually other than that is not allowed. If you have credit card debt, if you have if you're making payments for because your kids go to school, IRS isn't going to allow that. You may be living on $6,000 a month, but IRS may say through the National Standards Program, we're only going to give you $4,000 a month. Guess what? IRS wants $2,000 a month. So you have to have an exit strategy really on how to deal with this. Understand the IRS National Standards Program before you call IRS, and you will have success. If you're not sure or you're way over that, you should call a tax professional who can really help you through this. So remember, the 433F if the case is in the service center, 433A if the case is in the hands of a local revenue officer. You go to irs.gov and look for the National Standards Program. You will find them for food and clothing, housing and utilities. They will find you for car and the operation of your car. Make sure you understand that. By the way, if you like the information I have, please like or subscribe. Feel free to leave me comments. Well, you may not like my M&M man or me, that's okay. You can say that. But I like to answer questions for people who subscribe. Thank you so much. I appreciate you.